I'm Nico Simcoe, and I'm the co-founder and the CEO of Claire, and I'm one of the hosts of HR Tech Trailblazers. Today, I'm super excited to have Jeremy Zhang join us. He is the CEO and the co-founder of Finch. Finch is a company that I've really looked up to for, I think, since their inception 4 or 5 years ago. Jeremy is a very successful engineer who could have done many different things in his life and then decided to dedicate his career to Finch. And so with that, Jeremy, welcome to the podcast.
Awesome. Yeah. Thank you for having me.
Of course. Well, Jeremy, let's start maybe at the top. What is Finch and why did you decide to start it?
What we're building at Finch is a data and payments infrastructure in the employment sector. So I think there's 2 layers to that. The first is we allow applications to retrieve data from the entirety of the employment ecosystem. And these data points include employee census, pay statement level data, benefit contributions data. Beyond just reading data, we can actually write payments to the underlying infrastructure. So our first product there is being able to process deductions and contributions into the underlying payroll rails across this fragmented ecosystem. We also allow customers and applications to enroll in benefits via our API. In the future, we want to extend the payment functionalities to adjust earnings, process garnishments, running off-cycle payroll runs, etc. So that's like a good high-level overview of Finch. In terms of why we decided to start Finch, Finch was actually started during the pandemic, and I met up with my co-founder back in 2019. He's a COO of the business. We knew we wanted to build on the infrastructure layer, mostly in the fintech sector. The reason on the infrastructure side, as you mentioned, I come from engineering background, which means that I definitely enjoyed building more of the API layers rather than some UI components. So when we first started working together and right before the pandemic, what we were building was actually not Finch. We were building an embedded lending infrastructure. So allowing customers to issue new credit models, probably solving similar problems that you're solving in terms of the embedded fintech space. This, again, was prior to the pandemic. Once the pandemic hit, no one wanted to issue new credit models because just given the uncertainty of the environment. Which meant most of our design partners and customers basically just stopped and paused right there. There were 2 specific customers at that time that still wanted to work with Finch, but on something very specific, which is issuing PPP loans. And PPP loans it stands for the Paycheck Protection Program. It was a loan issued by the government during the start of the pandemic to allow SMBs to continue paying their employees, even though their businesses might not be open at that time. Of course, we wanted to help out as much as possible during that uncertain time. So we were like, okay, let's focus on how do we issue PPP loans to SMBs. And the most important bottleneck there was being able to verify the loan. The verification involved getting the employee data. Is the business laying off workers? Are they furloughing folks? Are they decreasing salary, etc.? So we started talking to a lot of these payroll providers like Gusto and ADP and quickly realized this ecosystem is extremely close, extremely fragmented. My background, prior to Finch, I was building API infrastructure in a very different sector in the automotive space. My co-founder, he came from the venture side. He was at Kleiner, and him and his team invested in Plaid, another infrastructure in the financial services sector. So it just clicked for us that the employment data set is extremely important. We had founder market fit because we were thinking about this problem across other sectors. And PPP loans is a very small sliver in terms of use case that can be built on top of this data set. But there's this huge range of other use cases that could be built. And that's how we first started thinking about this infrastructure layer and building Finch. And that was 4.5 years ago.
I think I'm very close to some of those use cases.
Yep.
Maybe let's take a minute here. I think you talked about in the introduction around deductions and automating deductions. Explain a little bit the use case of automated deductions, and if you have a specific payroll company that you worked with this on, or and a customer that was able to use it, that would be great.
Yeah, I think the easiest way to kind of explain deductions and even just our product in general and like what's a customer that would use our product is looking at the retirement sector. In the retirement use case, we have a customer, which is the largest retirement company, Fidelity. They sell 50,000 to 50,000 different employers across this range of systems, from the ADPs of the world, Gustos of the world, to larger employers on Workday and Oracle, etc. And as a company like Fidelity selling retirement benefits, you need 3 layers of functionality. The first is you have to understand who works at the employer, how is the employee demographic changing, so the employee census, who's joining an org. So once you join an org, they can open up a retirement account, and then are they eligible for this benefit at that moment? So that is understanding the employee org and census. The second layer is you need to understand how much are people making, so on the pay statement level, and are these base pay versus tips versus commission? How much are people taking in deductions? Is it pre-tax, post-tax? Is it retirement deductions, etc.? Those are to calculate if an employee is eligible, and then how much deductions to take. And then beyond that, which is what we're getting to your question, is now you have to be able to apply the deduction into the underlying payroll rails on every single payroll cycle with the proper percentages, with the proper company contribution across every single employee. And that is a very, very complex workflow, given kind of the fragmentation of the space, given them servicing 50,000 different employers. But that's so important because that is actually how the money is moved from the payroll system, from the employer bank account, with a proper taxes file to be able to fund your retirement account.
That makes sense. And so talk to us a little bit about some of the edge cases that you've seen, because, for those now who know a lot about payroll, deductions can also be like almost a scary thing, where sometimes people have too many deductions, and then there's like state rules about limitations. Like, do you guys play into that? Like, how do you make sure that when we go closer to automation, that, kind of compliance is still being respected?
Initially, when Finch started, it was relatively thin layer of infrastructure, right? Where, we didn't take on as much of the compliance workload. Therefore, we were just kind of an infrastructure where you send a command saying, we want to take a deduction that's pre-tax for this %. And then we were able to apply it across kind of the entirety of the ecosystem. What we realized over time is that what's built on top of our infrastructure for these retirement companies, health insurance company, is almost a layer of business logic that has that compliance component. And that could be creating a ledger of deductions. There's a lot of complexity around some companies have different levels of contributions up to certain percentages. So over time, we've actually built this layer of business logic and compliance logic. Not every company needs to use both the pure infrastructure and the compliance, but it is a nice to have depending on the needs of our customers.
Maybe to make it super concrete, let's take, you talked about Fidelity. We can talk about another customer if it's easier, but explain a little bit the world before Finch for them and the world post Finch. How has their experience evolved?
Yeah, you would be shocked by this, or anyone that's not within this sector. But this whole industry operates on SFTP and human operations. So in terms of SFTP, and this is for secure file transfer protocol, you're literally uploading a file to some server that is being downloaded and then acted upon. This is very similar to kind of the payments world with ACH, where you upload a file, and that's why it takes 2 to 3 days to be able to process the file. So prior to Finch, that's exactly what they're doing, setting up one-off SFTP file feeds with either the employer or the payroll provider to be able to retrieve this information and then kind of send data back. If there's no SFTP available, what a company like Fidelity would do is hire a whole operations team in the Philippines to manually go in as an administrator into your employer admin account to go and set deductions on a payroll cycle or set earnings, etc. And that creates an illusion for the employer of automation, but on the back end, it's just pure operational work. When we did the calculation in terms of the operational workload or work burden by the employment sector, it was around $7 to $8 billion of operational cost in the sector. So tons of frictional costs and operational costs, and this does not even include kind of the errors that happens given kind of the file and operations.
Why has no one tried to do this? Like how was the competitive landscape when you started? Who was leading in the space?
Even to be honest, now like there's not really any players focused on it. I think for one, it's just not an industry people think about, right? Like you need certain levels of expertise, both in terms of building API infrastructure, payment infrastructure, and secondly, you have to have very deep expertise in the employment sector, and there's like a lot of compliance and taxes involved. We were experts on the infrastructure and API side. We definitely had to build expertise on the employment side as we continue to build the product. It's not something that you would wake up in college and be like, okay, this is the startup that I'm going to build. It definitely need like this unique set of knowledge. The second reason, or several other reasons that we've seen in terms of why this industry has not transitioned towards a more connected model. One, again, is just the fragmentation. There's tens of thousands of systems that are originating or touching a portion of your employment data across different types of employment systems, from payroll to benefit administration to time and attendance to HR, et cetera, HRIS. And this fragmentation makes it really difficult for an industry consortium to come together to create a standard. It's hard to, if you have two players, it's easy to, just agree on here's a standard we're going to adopt. If you have 6,000, 10,000 different players, it's almost impossible. Even if some of the larger players try to create a standard, say ADP creating a standard, you're going to have to pitch this to your competitors to be able to adopt an ADP standard, which is like definitely a very, very difficult sell, which means that you need a neutral third party player like Finch building this standard and kind of pushing for collaboration across the sector. The second thing that we see is a lot of times when we see other industries move towards a standardized API model, it's mostly because of regulation that's pushing it. Specifically in the financial services sector with open banking, it was really successful in the EU, just given a lot of the open banking regulation that were adopted in Europe. We are now seeing more of that in the employment sector in specific segments. A good example here is in the retirement sector. There's regulation like Secure Act 2.0, where one of the provisions enforces that any employees that join an org is automatically enrolled in their retirement benefit. And if they're not enrolled within a certain period of time, there's specific fines that's taken by the employer and the retirement company. So now it's a risk for them to have to, send files back and forth because it's not live data. And therefore now they're actually pushing for the adoption of more real-time API connected models.
That makes sense. Okay, so let's maybe take a few minutes to talk about adoption. I want to go back almost to your use case with Fidelity, deductions, and think about the adoption at the employee level and at the employer level, right? So talk a little bit about this. I know there's opt-in models, opt-out models. Maybe describe how you go to market once you're starting to do these implementations with payroll partners.
As you probably know, for API companies, it's a little bit different sales cycle and post-sales cycle compared to just selling general SaaS products. Number one, because you have to be able to get on the roadmap a lot of times of your customers. And that's different than, hey, I'm just selling a SaaS product. You can just log in and start using the product. And number two, there is risk after a contract is signed, between a contract is signed and actually like full implementation, actually customers realizing the value of the product that they bought. There are several things that we do and we think about to kind of mitigate and optimize kind of those two things. The first is really thinking about what is the crawl, walk, run approach as we go into the go-to-market process and how to think about it from the product standpoint as well. What are like different levels of abstraction that we can provide in the product so that a customer do not have to build the most custom integration with Finch to start to be able to see the value. And this also comes from like the risk and compliance side, where if they want to take on more risk, they have the ability to take on more risk. If they want if they want something out of a box, more of a solution to solve their problem, they have the ability to do so as well. And then on the product side, of course, we have APIs available. They can build deep customized product with our APIs, or we provide some level of UI abstraction that they can just embed. Or maybe it's something as simple as, hey, we want to start with just more of like a referral partnership to see the value of how our two products align. And then over time, we want to get deeper into like a deeper, more embedded partnership. So that's something I'm sure you all think about, but something that's also relevant for us at Finch. And then on the implementation side, again, extremely important because a win is not when a customer signs, but actually they see the value of our infrastructure. So we have a full implementation team. They're very opinionated in terms of guiding the process. There's like a certification workbook in terms of here are like the steps that you need to go through to ensure that you have a proper implementation. And we want to be the experts, especially when talking to customers. We also offer professional services as needed, especially for some of these enterprise players. Maybe other thing unique that we do is we offer an implementation period, which means that the contract does not start until a customer is live. And that just aligns our team to the customers to make sure that we are reducing the time to value, time to live as much as possible.
Makes a lot of sense. So let's talk a little bit about the cases that don't work, because I think when you're developing net new technology and you're doing deep integrations, you have a lot of hypotheses on what use cases will really flourish, but some of those hypotheses sometimes don't work out. With Claire, to give you an example, we worked with a lot of time clock providers, and we love them, like great people. But the problem, what we found was consumers wouldn't sign up for financial services on a time clock, right? And it's hard to figure. It's an exciting experiment, but it just didn't work out. It's fine. There's a completely huge market on the side. It's okay, but we felt it was important at Claire to like do less of the things that didn't work out. Literally cut all of them to give all the love necessary to the ones that we're working out. So my question to you is, what are the use cases that don't work?
I love your example, and and that's like very, very similar to Finch, where like we think about what we're building as more of like we're exposing primitives from the underlying employment infrastructure, both in terms of data and like payment functionalities. And like when we started, we were definitely surprised by the types of use cases that are built. Some that we thought were going to be extremely successful, and then it was successful for a year, and then some other use case picked up steam, which is really interesting to see from the infrastructure level. In terms of our use cases, I would frame it as like there were higher value use cases to start that became more commoditized and more lower value to now. I don't know if we have use cases that completely didn't work, but we're definitely making the lower value use cases more self-serve and more of like an entry level product versus like some of the deeper functionality like the payment functionality. How we see our products as like we have three main products. Our org product is basic census employee data. These customers are more of like the general B2B SaaS, like HR tech companies. When we first started Finch, as you can imagine, it's easy to see Finch as, hey, you're like an HR integration company, and therefore here are all the HR tools that can be built on top of our infrastructure. And that was the case. Like initially, those they were our main customer base, but now we still have a large volume of these companies, but we've actually made a decision that, we don't want to overcharge on that side. We want to still provide a great experience. We want to provide a very entry level product there, make it self-serve so that customer can get started building on Finch. And most of our revenue is generated on our deep like payroll, pay statement, and deduction products, which is really high value and like highly sticky. And we're providing a lot of resources on the back end to stand those products up.
Okay, so now let's take a little bit of a step back and talk about the vision for Finch. What I think I really appreciate with the way you seem to have developed the company is it's use case based. It's really kind of infrastructure layer based, and so many great, I would say, fintech or even data companies were built that way. Just like really focus on the use cases, hone in on it. It's a big market, and then you'll just grow into it. But from time to time, you have to pitch a vision to your customers, to investors, to your employees around what is the vision of Finch? So maybe you can share that with us.
How we think about Finch is three layers of our infrastructure. I talked about kind of the two. The first is we want to build connectivity across all segments within the employment sector. So we started with a focus on the HR and payroll verticals, but this year we're actually expanding more into the benefits side. So specifically on the Benamin vertical and building data models there. And that includes plan level information, dependent level information, and more. In the future, as you can imagine, we can get into time tracking, providing hour level data, etc. So that is the first layer of infrastructure that we want to build. The second layer is like getting deeper into the payroll payment rails. Our first product there is our deductions product. That is already processing this year around $4 billion in deductions, and that is exponentially growing over time. We want to add on new payment products like processing garnishments, adjusting earnings like tips and wages and hours worked. We want to also draft payroll runs, provide infrastructure to provide benefit eligibility, etc. on this kind of payments layer. And then the final layer that we have is the data layer. So that's kind of the phase 3 of the Finch vision. Over time, as we're building these primitives and all these use cases are built on top of Finch, more and more employers are connected, therefore more and more employees are connected. Our North Star metric at Finch is the number of employees that is processed through our infrastructure. Currently, we've processed, I believe, around 14 million employees, which is a little less than 10% of the entire US employee base. Our goal is to get to 100% of those employment records processed. And as you can imagine, this is a very, very valuable data set that we want to build additional products on top of. Whether it's to improve our current product, to make our typings better, et cetera, whether it's building a benchmarking API over time, building things like people analytics, et cetera. Our goal is to really layer on these data products.
I really love the long-term vision. Let's say you continue on the use cases. You really built this kind of amazing, I would say, connectivity moat. How do you make sure that you own the market at scale and you can really deliver on that vision?
I think there's a natural moat that is built with infrastructure products, especially for us. You can think of us almost as like a two-sided marketplace. Like the flywheel we think about is more applications built on top of Finch means that we will build more preferred partnerships with the underlying providers, which we already have with a lot of the providers that we're working with, like Gusto and more that's coming soon. For another example is like Intuit is a big investor in Finch, and that just kind of creates a moat, especially on the provider side. Once we have deeper provider partnerships, that means that more application will be built on top of Finch. So that's a sort of flywheel that we're thinking of. Another thing that we're thinking of is like, we are creating the standard, and when Finch becomes a standard, or it's already sort of a standard in the current state. That creates a moat in terms of just people understanding the data models that Finch offers.
I think almost as one of the last questions, and selfishly, you're one of the smartest people in the space of, I think, employment data. And at Claire, we believe that employment data is one, not all the pieces, but one of the pieces for better financial prosperity in the United States from most consumers. And so anything that's happening in the world of democratizing employment data is super exciting. So now, you have me on almost, on the other side. I'm a big believer in what EWA can do to get people out of a financial hole and create better financial equity. What is your view of EWA? Like, take it from any level you want, but what's your view on EWA? What's advice for, someone like me or, the Claire team, or even like your payroll partners to learn more about the space or think about the space?
I really see the way that we're getting paid is somewhat broken, right? And it's antiquated because of this infrastructure that we're talking about. The only reason that we're getting paid on a weekly or a bi-weekly basis is because of the old school kind of file feed method and more operational based method. So when we talk about, hey, like we want to move towards this more real-time employment infrastructure, on Finch's side, of course, we're powering some of the real-time deductions, but the other side of the real-time is actually real-time earnings. And we see that trend. We definitely see that trend already on the deductions front, and we already see that trend in the on the earnings side as well with Claire. I really like how Claire thinks about go-to-market instead of going direct to employers. Like you're actually trying to embed deeply into these payroll providers, and we believe that these payroll providers do not fully understand the complexity that's needed to build certain fintech products, like earned wage access, nor do they, should they focus on it, because they should focus on servicing their own customers. This is like an additional revenue stream for them. They can increase stickiness, improve margins with this product. So directly partnering with a player like Claire, and Claire using it for distribution really, really quickly makes a lot of sense to me.
Well, on that note, Jeremy, thank you so much for joining us. I'm a big fan of you guys and really cheering for you guys on the sidelines.
Awesome. Thank you.